Global stocks rise as U.S. nears deal to lift debt ceiling. The risk of a calamitous default fell after a weekend agreement between Democrats and Republicans. Global stock markets and U.S. equity futures rose to start the week after major progress on negotiations to raise the U.S. government's debt ceiling. Futures referencing the Dow Jones Industrial Average, the S&P 500 and the Nasdaq were up 0.3% to 0.5% during Asian trading hours. Most Asian stock indexes moved in the same direction, with the Nikkei 225 once again closing at a 33-year high. U.S. markets, as well as stock exchanges in the UK and Switzerland, are closed Monday for public holidays. President Biden and House Speaker Kevin McCarthy, D. California, reached a tentative deal on Sunday to raise the country's debt limit, heading off the risk that the U.S. will default on its debt. Treasury Secretary Janet Yellen said last week that the failure to reach a deal could lead to the government being unable to pay its bills by as early as June 5. The news that a deal was on the cards improved sentiment among Asian investors on Monday, said Kun Go, head of Asia research at ANZ. Investors have been fairly nervous about this. It wasn't clear whether a deal could be done, he said. The hope that the two sides would reach an agreement this weekend helped fuel a broad rally in U.S. stock prices on Friday. But there is still work to be done to push the deal over the finish line, including votes in both chambers of Congress. That may explain why the market response on Monday was somewhat muted, said Tai Hui, chief market strategist for Asia Pacific at J.P. Morgan Asset Management. There's still a chance that hardline Republicans could vote against it, so we're moving in the right direction, but it's not a done deal, said Hui. The market is still taking a wait-and-see tone. The U.S. dollar weakened against Asian currencies, including the Japanese yen, the Taiwan dollar, and the Indonesian rupiah. Some analysts put that down to a greater willingness among investors to take risks. Although a U.S. default has been the major focus for investors over the past few weeks, many of them have still turned to the U.S. dollar as a haven, the analysts said. The debt ceiling agreement will remove an overhang on Asian currencies, said Carlos Casanova, senior economist for Asia at Union Bancaire Privée, although he said it would only provide short-term relief. The fear of a U.S. debt default led to a spike last week in the yields offered by short-term Treasury bills, which are typically considered among the safest securities in the world. The yield on bills that matured June 1 rose to 7.1% last Wednesday from less than 6% the day before, although the yield moved lower at the end of last week. Trading in futures linked to U.S. government bonds was thin on Monday, a result of the U.S. public holiday. But there was a mild decline in the prices of futures linked to 2-, 5- and 10-year U.S. government bonds during Asian trading hours. Bond yields rise when prices fall. Japan's Nikkei 225 closed the day at 31,233.54 points after rising 1%. Indexes in Australia, Taiwan, and India were also higher, but Chinese shares fell. The benchmark CSI 300 index was down around 0.4%, while Hong Kong's Hang Seng lost more than 1%. The drop in Chinese share prices came after economic data this weekend showed that China's industrial profit in April fell 18.2% from a year earlier, fueling increasing skepticism about the country's economic recovery. David Chow, Invesco's global macro strategist for Asia Pacific ex-Japan, said Chinese stocks are undervalued, and said there was a good chance the country's central bank would loosen the reserve requirement, freeing up capital that Chinese banks could then use to lend. It will send a strong signal from policymakers that they are there to support the economy and want to boost private and investment sentiment in China, said Chow. In March, China's central bank lowered the amount of deposits banks have to set aside by 0.25 percentage point, the first time in 2023, underscoring Beijing's efforts to kickstart economic growth this year. The People's Bank of China said the decrease would lower the average reserve requirement ratio across the banking system to 7.6%.